we continue with our next presentation, so please welcome Nevada King Gold.
Thanks very much. Thanks for being here. So you can tell from the title slide and our company name, obviously we're based in Nevada, best state for mining for gold. The crux of the story is the high-grade deposit, and we've got really high grade here in oxide, in Nevada, kind of everything that you're looking for. So let's get into it here. So we put out a resource in June. We've got over 1 million ounces now at over a gram per ton. Over 90% of that is in the M&I category, and again, all oxide. We've got 100% of the land package. That's a 130 kilometer squared land package in the southeast area of Nevada. So it's kind of a relatively underexplored area of Nevada as well. It's a past production site as well. We've got 2 past producing mines. In fact, 3 actually. One was a small underground mine, but 2 open pit past producing mines on the property. The resource is on patented land, which makes the permitting a little bit easier. Got some infrastructure at site with roads, power I'll get into. We've done some phase 2 met work as well, showing run-of-mine potential for heap leach, and then a mill component for the high-grade core. We are fully funded. We got about 9 million Canadian in the bank, so fortunate that we can continue to do our drilling program. We're in the midst of our phase 3 drilling program right now, and going to continue on beyond that. You'll see a press release probably announcing another 30,000 meter program to go in later this year. Finally, we've got the best-in-class insider ownership. You got about 40% of the company owned by management and insiders. So that's a unique value proposition. And just a little bit of by way of background for me, I was in equity research for about 11 years, covered this stock myself. When I saw the alignment between the management team and the company, it really attracted me to this story in terms of alignment with shareholder values. So let's cover some of the same things, just a little bit more detail. It's an open pit constrained resource, 264 kilometers northeast of Las Vegas, so makes for a popular site tour with people wanting to end the weekend in Vegas. You got a 130 kilometer square land package as well. We put out that NI 43-101. We got 1.1 million ounces in all categories at 1.1 grams per ton. Again, can't emphasize enough, all oxide, which is a key differentiator for our story. We've done over 100,000 meters plus of drilling. About 95,000 meters went into the resource. We've done about 75,000 meters ourselves that went into that resource. So this is a more aggressive exploration company than I think you'll see in other opportunities. So we've got that kind of core fundamental value with the resource, and as well an aggressive exploration program. We're not stopping. The resource does not mean this is it. We're looking for other deposits here. We do expect, we've got the 1 million ounces right now, and we expect multi-million ounce potential on this land package, and I'll show you why. This is the management team here. A lot of changes recently. Colin Cattell moving to the chairman role, me assuming the CEO role. We got a new CFO. We'll have a new VP exploration coming in. So really a fresh set of eyes on this story here. Don't need to dwell on this slide. Nevada, the best state for mining. You've seen a lot of acquisitions. You get to a certain threshold in terms of ounces, you do tend to get acquired. So we're in certainly the right jurisdiction here. You've seen Orla come in, First Majestic, Centerra, Torex, Anglo Gold as well recently this year with the Augusta acquisition, Oceana and Minera. Just a lot of companies. Everyone's looking for exposure to Nevada. Just a quick history lesson. As I mentioned, this is a past producer. We have 2 past producing mines on the property. From 75 to 85, about 100,000 ounces of gold were taken out. So this helps de-risk the metallurgy, show that this thing works as an operation, shows there's plenty of gold around, and as well we're benefiting from the infrastructure at site. Now it was owned by Goldfields and Kinross in the early and mid-90s. Obviously that's a different Kinross than we have today, a different Goldfields than we have today. And the other key differentiator is that we have a lot of technological advancements, and we're using that to our advantage right now. We're using geophysics, geochem, hyperspectral, every tool that we have in our tool belt, because the outcropping areas, everything that outcropped had become a mine on this property. The rest is undercover, and that's why we're using technology to find these other deposits. So we got great infrastructure, we got all the water we need at site, we got power, we got modular crews that allows us to drill for $70 per meter, obviously RC, but incredibly efficient drilling costs as well. It's a quick drive to site as well. You can see from this slide, you fly into Las Vegas there, just drive 3.5 hours north and you're at site. It's just off the highway. So I mean, if you could put a gold deposit anywhere in the world, you'd put it right here on patented land. You're in the county with 4,500 population. You're not having any people objecting to this. Not a lot of economic development. Everyone's pro-mining here. This is kind of an overview of the district package. As I mentioned, 130 kilometers squared. Really the only area that had been historically explored is that resource area, which you can see here. That's where the resource exists. This white line here, that's a mineralizing fault. So still open to the north, open to the south. We're still exploring those zones. This here, Silver Park, that's the other area of past production, which is also a focus for exploration. The other thing I'll note is this caldera here, this red outline. That's the Atlantic caldera. And a caldera is a collapsed volcano, and it's really on the margins where you have the fluid that comes up around the volcano. And that's effectively where we're finding mineralization, and we're exploring around the margins of that caldera. The best analog for our property is Round Mountain, which is about 250 kilometers away. Obviously, Kinross's operation, they've discovered almost 25 million ounces there. We're at 1 million ounces, but I think on our way to something between 1 and 25. This is that mineral resource that we put out in June. You have a really high-grade core, which is a differentiating feature as well. So if you take the cutoff grade to 2, you still have 500,000 ounces at 4 grams per ton. Again, all oxide. So this is a really unique deposit here. We've got a high-grade core, which would be fed through a mill, and you've got the low-grade volcanics, and that gets stacked on a heap leach. That is run-of-mine heap leach, the least expensive operating costs. So you've got about half the tonnage reporting to a mill, and you got about half the tonnage reporting to the heap leach pad. Additionally, this is a very well-drilled deposit, well-defined deposit. You've got over 90% of those ounces in the higher confidence M&I category. When we look at other projects in the US, this becomes the second highest oxide gold deposit of at least 1 million ounces. The one above us, they're actually focused on rare earths in California. A couple below us are in Idaho. I think we really stand apart from other projects that are oxide in the US. Just going back, how we kind of came across this project, went to the bottom of the pit, drilled a fence of 5 holes, hit grades between 2.5 to 5.5 grams per ton over 50 meters. We went to the 500 meters to the north, drilled 9 meters, about 8.3 grams per ton, and at that point it was game on for this project. We then came up with a new geological interpretation. Past operators thought this was a single vein descending at about a 45-degree angle. We understood this to be a number of step-down structures with multiple faults. That multiple faulting is important because it allows for more fluid deposition on the property. And so we went to a phase 2 program, drilled 75,000 meters to test this theory, and we justified the theory that this is a number of step-down structures here. So it was with that 75,000 meters of drilling that is now factored into the resource update. So in the interest of time, just show you some of the highlight holes here. These are reflected in the resource. When I was in equity research, this top intercept here, 11.6 grams per ton gold over 108 meters. When that came across my screen, I really wanted to know more about this company, and obviously here I am today, pretty excited. But putting out consistently high-grade holes here through 2024. You can see we're putting out 30 of the top 100 most significant intervals drilled in the US for pre-revenue companies in 2024. This takes us to present day here. We're now in our phase 3 drill program. We're 25,000 meters into a 30,000 meter program. We're really looking for that other satellite deposit or extensions of the resource to the north or to the south along that mineralizing fault here, that West Atlanta fault here. So we've got an aggressive exploration program. Once this phase 3 program is concluded, we're still financed to drill another 30,000 meters, and we're going to benefit from the knowledge from this phase 3, and we're going to look to hone in on one of these areas, or maybe multiple areas, where we're getting the most joy and success. So far, that's Atlanta North, Atlanta South, and Silver Park. This is Silver Park. We've had some near-surface intercepts here of well above cutoff grade, so we're excited with this and advancing this. This is the area of past production as well. We think that this might be the other half of the Atlanta resource. That's because it shows the exact same geochemical signatures as we see at the Atlanta resource zone. So as we were drilling further west, it was getting deep. Then we stopped and we moved significantly towards the west, towards the Silver Park target. We found that this structure actually comes back up to surface. So we're pretty excited with the potential to find, if we can find some of these higher grade intercepts closer to surface, this could be a pretty significant satellite deposit for us. So this is one of the project's targets that we're working on here. Atlanta South. This is the one that has the potential to be a multi-million ounce deposit. It's in that Carlin type mineralization. So it's in the Pogonip limestone. This Pogonip limestone is the host for other significant deposits in Nevada, including Archimedes, which hosts about 5.4 million ounces, Long Canyon with about 2 million ounces. So the geology team at site, they're really excited with this Atlanta South, and this will be a focus for the rest of the Phase 3, and I expect it will be a focus for Phase 4 going forward as well. Atlanta North, this is an earlier target for us. We just acquired this land in 2022. We've only poked 7 holes into this area. We've already come across gold mineralization, 0.3 grams per ton we hit over 36 meters at 36 meters depth. So early days here, but the key is that it creates this gap zone towards a historic hole where there's about 0.9 over 11 meters. So we've got to test this gap, see what's in here. This is just to the north of the resource area here. So we're going to fill in that gap with some drilling and see what we got. Now, we've got gold in the ground. How does the gold come out of the rock? That's the other key to the story here. And fortunately for us, it comes out very efficiently. We can do run-of-mine heap leaching for the non-silicified volcanics. We get about an 83% gold extraction. For the silicified volcanics and the silica breccia, we're running at about 86 and 87% recoveries. That would be for the mill component. Now just taking a step back and seeing how this deposit is valued compared to other recent acquisitions. We're trading about $40 per ounce right now. If you look at recent acquisitions in Nevada, they've been acquired for about $230 per ounce. There's a massive gap here to be closed, and we're going to work on closing that through exploration and through advancing this project to engineering. And in 2026, I think you could see us coming out with some engineering and economics on the deposit that we have here. We've got research coverage from Desjardins and Roth Capital. These are Desjardins developers here. We trade at about a 65% discount on a price to NAV basis and a 65% discount on an EV per ounce basis versus those developer peers. Again, a massive gap to be closed here. You can see this is a unique chart, I'm sure, at this conference, one that descends to the right. You don't see that often here. What happened was when we put out our resource update in June with that 1.1 million ounces, that 1.1 grams per ton, the expectations, because of those high-grade hits that we were putting out, were elevated. People were expecting 3 to 4 million ounces. We came out with 1.1. The stock dropped off precipitously. This allows for the opportunity now to get in at the lowest price of any shareholder. You got the management team with about 38% ownership. The average cost base for the management team is about 30 cents. We're trading at about 16 cents right now. A phenomenal opportunity, I think, right now for investors who are looking at the stock. Another thing I'd point out, when I joined the company, institutional investors were at about 2%. We got that at about 13% and growing currently. Again, a key differentiator, management and insiders at 38%, and the remainder is held by retail investors with 49% ownership. Effectively, that concludes the presentation. The key to the story is that we have our valuation backed by a solid, high-quality resource of 1.1 million ounces at 1.1 grams per ton, all oxide. The other prong to the story is the exploration. We have the most aggressive exploration program going on in Nevada for a junior exploration company. Like I said, in the midst of a 30,000 meter program, and we're going to do another 30,000 meter program. So we've got the valuation gap to close with the resource and also more discoveries to be made. If you got any other questions, come by the booth, and thank you for listening.